In today's show, where will the Bitcoin price end this month of November, which ends tomorrow? In today's show, I'll be sharing the 5 things to watch out for in the Bitcoin market this week. As Rec Capital shares here, all it took was a 7% plus daily candle to dissolve all fears and worries of a new Bitcoin bear market. And as pointed out here, the price of Bitcoin just 1 year ago was 17,000. So do not miss the forest for the trees. And as Pomp points out here, there are now 9.3 million Bitcoin addresses with a balance of 0.01 BTC or more, which is a new all-time high. Also, as Max shares here, the global insurrection against banker occupation breaks out in Guadalupe. El Salvador is staging a speculative attack against the US dollar, and Bitcoin is becoming the global reserve currency, just as we predicted 10 years ago. Also in today's show, digital asset titan Grayscale says metaverse is in the early innings and predicts a $1 trillion valuation for the emerging tech sector. That's right, Grayscale says metaverse has the potential to grow exponentially and compete with the current technology titans like Facebook. Quoting them here, the market opportunity for bringing the metaverse to life may be worth over $1 trillion in annual revenue and may compete with Web 2.0 companies worth $15 trillion in market value today. And speaking of the metaverse, Ethereum whales are buying 3 specific gaming altcoins as Bitcoin and crypto markets bounce back. I'll be revealing these 3 specific alts. Also in today's show, hedge fund manager Anthony Scaramucci compares Bitcoin to Amazon in the year 2000 and predicts strong Q1 for BTC. Quoting him here from a recent interview on CNBC Squawk Box, if you and I were on this conversation a year ago, Bitcoin had 100 million wallets. Glassnode is saying there's about 240 million today, so that's great exponential growth, but it's not fully saturated. So I think there are buying opportunities all around, and if you don't have leverage on, this is a good day for you as an investor. Also be sharing the latest updates from Plan B, creator of the Bitcoin stock to flow model, as well as crypto analyst Tech Dev, who says 230,000 top remains his base case for mid-December to end of January, as well as the latest from Mikhail Vande Pop, who predicts top of the bull around 250,000 in 2022, with the bottom of the bear around 60,000 in 2023. We'll also be taking a look at the overall crypto market. As you can see, Bitcoin, Ether, and many of the alts are breaking out back in the green. But where's the Bitcoin price likely to go next? Find out all this, plus so much more, in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day. The goal is to get to 100,000 subscribers. If you like getting that crypto, be sure to smash that subscribe button and ring that bell to turn on all notifications to receive daily premium crypto news alerts every single day, just like this. And real quick, before I kick off today's show, today's episode is brought to you by iTrust Capital, the #1 crypto IRA provider in America, which currently has over $3.5 billion in transaction volume. Now, when it comes to trading crypto, tax-free, look no further than iTrust. Not only can you trade the top cryptos, including Bitcoin, Ethereum, you can also trade physical gold and silver. And yes, they have military-grade security wallets backed by Coinbase custody with a $320 million insurance policy. And they have a special promo they're running right now, where if you sign up today using my referral link in the description right down below, you're going to receive $100 as a funding reward in BTC. Absolutely free, truly making this a no-brainer. Also like to point out that there are no setup fees as well as no monthly fees. So go ahead and click my referral link in the description right down below. Set up your tax-free crypto IRA account today and claim your $100 in free BTC, and let's start stacking those sats tax-free. All right, welcome back to another episode of Crypto News Alerts. I'm your host, JV. How's it going, crypto fam? Holla at your boy in the live chat. Now for the 5 things to watch out for in the Bitcoin market this week. Bitcoin bounces back in record time. That's right, just 3 days after losing 6,000 in a single day candle, the Bitcoin price action is already back from the brink. And in a classic end of the weekend, Bitcoin rose to produce a weekly close of 57,300 on Bitstamp, thus avoiding its lowest such weekly end price in 2 months. The gains have since stuck with 57,000, still the focus at the time of this recording. And in a fresh analysis, popular trader and analyst Rec Capital noted that the 21-week exponential moving average at 52,500 had provided support as a time-tested bull market indicator. As he shares here on Twitter, strong Bitcoin reaction from the 21-week EMA area. So there you have it. And despite local highs of 58,300, Bitcoin has yet to deliver a definitive breakout as major resistance at 60,000 remains untouched. Now, all previous attempts to crack that selling zone since losing it as support has ended in a firm rejection, as None Your Business points out here in this Bitcoin 4-hour linear chart. Now, the uptick nonetheless caught some by surprise. Data shows with liquidations nearing $300 million over the past 24 hours, all it took was a 7% plus daily candle to dissolve all fears fears and worries of a new Bitcoin bear market. And I don't know about you, but I announced it yesterday. I just bought the Bitcoin dip at $53,750. Feels freaking great, stacking sats at a 25% discount. Then lo and behold, 58,000 Bitcoin shortly after. Was there ever any doubt? And Rec Capital also shares Bitcoin is progressing favorably towards a monthly close above 58,700, as you can see here in this chart. And the monthly close is tomorrow, just FYI. Now for the next factor to keep your eyes out on this week, macro markets are expecting a turbulent start to the week as the new Novid variant, Omicron, continues to bite into sentiment. And to me, this is nothing more than FUD. So let's check out the FUD puppet himself, Peter Schiff. Talk about spins. CNBC is claiming that today's 8% Bitcoin crash doesn't discredit its safe haven or store value status because many altcoins are down even more. Being less risky doesn't make Bitcoin safe, but in the end, Bitcoin will prove to be just as risky as any altcoin. And Max Kaiser recently tweeted, "Did you know scientists have created gold in the lab?" That's right, about 5 years ago, the staff at CERN discovered material forming on the LHC was made up of precious metals, about 90% gold, 10% platinum, and some rare earth metals. So there you have Peter Schiff wrecked again. And now for the third factor to keep your eyes out on this week, 50,000 echoes the $30,000 floor. That's right, those concerned about a retracement from the current levels potentially need not to look too far down on the Bitcoin price chart. According to the latest order book data from analytics resource Material Scientists, a giant buy wall has now been placed and should keep the market above $50,000. The stakes may be high, as some said this weekend, that a failure to hold that level will cause them to rethink their approach to Bitcoin. But given the sheer size of support, this now seems less likely. And quoting the Material Scientists here, "Not sure why y'all so scared. This is the largest bid since the $30,000 bottom." Now, if this 50,000 is thus the new 30,000, it would class the current retracement from all-time highs as modest in comparison to other, notably the May dip of nearly 50%. And continuing, Material Scientists meanwhile noted something unusual. The same entity responsible for support also placed resistance at 70,000, as he shares here. Essentially, one actor has the entire market in their grip, it explained. They know 1 month in advance how this whole thing was going to play out. And 70,000 thus forms the seminal point of focus for the bulls, eager to see a continuation of the bull run before Q4 2021 is out. Now for the next factor to keep your eyes out on this week, the next few weeks will be very telling for Bitcoin as it makes or breaks some significant correlations. That was the conclusion for popular Twitter analyst Tech Dev at the weekend as Bitcoin continued to replicate gold's journey from the 1970s. The curious, even eerily similarities between Bitcoin in 2020, 2021, and gold 50 years ago have endured despite some volatility, anomalies in the Bitcoin price action. Should the trend continue, Bitcoin faces a dramatic run-up with a price top up to $280,000 per BTC. The deadline, mid-February 2022, quoting Tech Dev right here on Crypto Twitter, updated and revised Bitcoin Golden Roadmap, 1970s gold fractal now precisely aligned and anchored to both local high and low. Only December/January affected, with model extending to first half of February. September 43 to 58,000, check. October 53 to 67,000, check. November 58 to 90,000, December 70 to 110,000, January 110 to 170,000, and February first half 180 to $280,000 per BTC, as he outlines right here in this chart. Now for the fifth and final factor to keep your eyes out on this week, where will this month of Moonvember end by tomorrow? This was once the multi-million-dollar question on everybody's lips, but now acceptance is slowly spreading that this bull market may take longer than planned to mature. And despite this, optimism for the short term remains. In a new poll conducted on Twitter by Bitcoin account, which ended on Monday, he asked, where will Bitcoin end November 2021? And 47,963 people voted, and 35% of you said above 60,000. What are your thoughts? Let me know in the comments right down below. Now let's break down our next story of the day. Crypto giant Grayscale says the metaverse is still in its very early stages and predicts that the emerging tech sector will sort of become a $1 trillion opportunity. How many of you are bullish on the metaverse? Let me know in the comments below. In a new report, Grayscale says that the metaverse is bound to transform gaming with the advent to play-to-earn platforms that enable users to convert their digital assets for use outside the game. Quoting them here from this new report, this new paradigm allows users to own their digital assets and non-fungible tokens trade them with others in the game, and carry them to other digital experiences, creating an entirely new free market internet native economy that can be monetized in the physical world. The asset manager adds that potential of the metaverse extends beyond the borders of gaming. As they share here, gaming is just one of the most immediately addressable segments where value is already starting to naturally shift to Web 3.0, but the metaverse opportunity extends far beyond gaming. The metaverse is estimated to be $1 trillion revenue opportunity across advertising, social commerce, digital events, hardware, and developer/creator monetization. Web 3.0 metaverse economies can use their own digital currency like Mana, aka Decentraland, or the currency of the layer 1 based crypto cloud economy platform they're built on, such as Ethereum or Solana. Grayscale says that the metaverse has the potential to grow exponentially and compete with current technology titans like Facebook. Quoting them again here from this report, the market opportunity for bringing the metaverse to life may be worth over $1 trillion in annual revenue and may compete with Web 2.0 companies worth $15 trillion in market value today. And checking out the total metaverse market cap, it's currently sitting at just above $54 billion with about $15 billion in trading volume in the past 24 hours. And here are the top cryptos in the metaverse. We have Decentraland with a $9 trillion market cap, currently trading at $5. Axie Infinity with an $8 trillion market cap, trading at $134. The Sandbox with about a $7 trillion market cap, trading at $7.51. And Theta with about a $6.5 billion market cap, trading at $6.50. Followed by Engine Coin, let's go ENJ, with a $3.1 billion market cap, trading at $3.82. And ever since Zuck made the announcement of the metaverse, these metaverse tokens have been absolutely surging and on fire. Which metaverse tokens are you currently most bullish on? Let me know in the comments right down below. And before I break down next story of the day, and I share with you these 3 gaming metaverse altcoins that Ethereum whales are buying right now. But first, let's take a quick look at the overall crypto market cap, sitting just under $2.6 trillion with $110 billion in volume in the past 24 hours. Current Bitcoin dominance is 42.1%, with the Ether dominance on the climb at 20% even. And checking out the top gainers within the top 100, we have the Sandbox leading the pack, which is a metaverse coin, up 88% for the week and 15% for the day, trading at $7.42. Another metaverse token, Gala, up 84% for the week and 12% for the day, trading at about 70 cents. And Stacks up 12%, trading at $2.07. But all right, now let's break down our next story of the day. As Bitcoin and the overall crypto markets begin to show signs of recovery, new data is revealing which gaming tokens Ethereum whales are most interested in accumulating. On-chain data shows the largest Ethereum whales in existence are now purchasing the gaming metaverse Decentraland, aka Mana, above all gaming tokens. And on average, each Mana whale purchase has totaled an average of $74,320 over the last 7 days, according to the whale tracker, Whale Stats. And whales are also accumulating the virtual gaming token powering the Sandbox, the Sand, with an average purchase amount of $27,333 per transaction. And coming in third is gaming ecosystem token Gala, Gala, with an average of $26,339 per Ethereum well purchased. And before I break down our final story of the day, hedge fund manager Anthony Scaramucci compares Bitcoin to Amazon in the year 2000 and predicts a strong Q1 for BTC, as well as I shared the latest from Plan B, creator of the Bitcoin stock to flow model, as well as the latest Bitcoin price predictions from Tech Dev and Mikhail Van de Pop. But first, I want to remind you to smash that show more button right below this video in the description for a detailed analysis of what's going on in the crypto market. This goes for all 990 plus videos right here on my YouTube channel. Also, some very helpful resources for you to plug into, including my daily letter, which goes out to over 30,000 subscribers every single day. To subscribe, visit letter.cryptonewsalerts.net. Also have a blog I update daily, which could be found at cryptonewsyes.com. Also be sure to smash that subscribe button and ring that bell to help me get to 100,000 subs. And of course, you can follow me on all the major podcasting platforms, from Spotify, the home of the Joe Rogan Experience, to Apple's iTunes and Google Play. In fact, we just smashed 500,000 podcast downloads this month of November. As I wrote here, greatly appreciate all the continued support. Bitcoin is heading to $100,000 plus real soon, and no IMF, World Bank, China, the Bank of England, Hillary, or their old world order can stop it. That, my friend, is a fact. But all right, now let's break down our final story of the day. Renowned hedge fund manager Anthony Scaramucci is comparing Bitcoin to e-commerce giant Amazon, which was volatile in its early days, but eventually became one of the best performing stocks in the world. That's right. In a new interview on CNBC's Squawk Box, the Skybridge Capital founder says Bitcoin has grown exponentially in terms of fundamentals over the last year, and that the recent correction gives investors a chance to buy at a discount. That's right, BTFD all freaking day. If you and I were on this conversation a year year ago, Bitcoin had 100 million wallets. Glassnode is saying there's about 240 million wallets today. So that's great exponential growth, but it's not fully saturated. So I think there are buying opportunities all around. And if you don't have leverage on, this is a good day for you as an investor. And although Scaramucci says he doesn't think Bitcoin is an asset that you can use as a hedge against inflation yet, he believes in the long-term potential of the leading cryptocurrency, as he shares here. I don't think it's a hedge against inflation at this moment in time. I think long-term, if you got a billion wallets, 2 billion wallets, and Bitcoin was in what I would call a stable trading zone. Think of Amazon, 20 plus years of Amazon. This is sort of Amazon in the year 2000. This comes with some volatility, and it comes with a lot of fear and uncertainty, and that's the reason why it's down. The hedge fund veteran adds that right now, Bitcoin's volatility is shaking out investors and eliminating excessive leverage in the system, which could put Bitcoin in a position to rally next year. As he shares here, I just think this is a risk-off situation right now. Bitcoin and other cryptos being volatile, that's taking people out of the game. It's also washing out some of the leverage, which I think sets up a pretty nice first quarter. I would love to debate the people that think that Bitcoin is an inflation hedge at this stage in Bitcoin's evolution, because I just don't see that as being the case. So there you have it. And now checking out the latest from Plan B, creator of the Bitcoin stock to flow model. He recently updated us. Bitcoin has better risk adjusted returns than all other assets in comparison to Tesla, Google, Netflix, Apple, Amazon, Facebook, you name it, 100%, including gold and silver. And Plan B also tweeted here, currently there are about 18.9 million Bitcoin. 1 million, which is 5%, were created or last transacted in 2009, including Satoshi, and 8 million, which is 40%, created or last transacted in 2021. And he also updated us here, was 69,000 the top for this halving cycle, and 103,000 people voted. 78% of you said the top will be greater than 69,000. That's my vote for show. And then 22% of you said 69,000 was the top. And now checking out the latest from crypto analysts, Tech Dev, mid-December to end January with a $230,000 top remains my base case. Now, obviously, the earlier side of that window looks less likely. I couldn't care less if it's right. I've seen compelling work suggesting a top from mid-December to mid-March with targets from $120,000 to $260,000. And he also shares here other two models currently tracking. Number one, 2017 Bitcoin flattened in a line for log 1.272 projected top end of December. And number two, 2017 Bitcoin flattened in a line from the log 1.618 projected top first half of February. And he also points out here, models are useful confluence. Tracking multiple is recommended so a new leader can emerge if your front runner is invalidated. My highest priority remains identifying the top through indicators whenever and wherever it comes. So there you have it. And checking out the latest from crypto analyst Mikhail Ben-Day-Pop, top of the bull around $250,000 in 2022. Bottom of the bear around $60,000 in 2023. As he shares here in this chart, let me know if you agree or disagree with this crypto analyst, and where do you feel the Bitcoin price is likely to end before the end of this year? Holla at your boy in the live chat. Now for a quick recap of what I covered with you here in today's show, I shared with you the 5 things to watch out for in the Bitcoin market this week, as well as digital asset titan Grayscale says metaverse is in the early innings and predicts $1 trillion valuation for the emerging tech sector. Also shared with you the 3 gaming metaverse altcoins that the Ethereum whales are currently buying, which are Mana, Sand, and Gala. Also in today's show, I shared that hedge fund manager Anthony Scaramucci of Skybridge Capital compares Bitcoin to Amazon in the year 2000 and predicts a strong Q1 for BTC. But where do you feel the Bitcoin price is likely to go next? Let me know in the comments right down below. Now for the top 3 comments from yesterday's episode. Bring Facts wrote, I dollar cost average and I'm a dip buyer. I'm a long-term hodler and now I'm officially a miner. Been a long time coming, but chase your dreams until they become reality. Feeding them with solar is the next goal. Way to go, bro. Love it. Much respect. Keep stacking. That crypto fam. And our next featured comment comes from G. Dean, who wrote, great show, JV, as always. I'm a big fan of Litecoin. It has been around from the beginning and was a top 3 coin a few years back. It's a fantastic buy at these prices and it has a strong following, but always BTFD. Today is a great time to buy since we're currently in extreme fear. The king of crypto, BTC. You got it, fam. BTFD. Hodl gang. Now for our third and final feature comment of the day comes from Volks Quadman, who wrote, Ace is always JV. The Bank of England are just illustrating how ignorant they are about Bitcoin. Makes me ashamed to have come from that country. I've been able to help several people hit hard times because Bitcoin, something the pound cannot do for the same time frame. What? Bank of England just keep printing paper and do Cryptoland a favor. I'm in Portugal. It's crypto friendly and my personal dream. The Bank of England needs to watch crypto news alerts and stop trolling El Salvador. Thanks, my dude. And I responded, greetings from Portugal, fam. You are 100% right. And as the money printer continued to go, brr, Bitcoin will continue to moon. Gotta love it. And to be featured on tomorrow's episode, drop me a comment right down below. Well, that's going to conclude today's show. As always, I appreciate you tuning in and journeying along with me inside this incredible crypto matrix. That's right, Bitcoin is the glitch in the matrix. And if you gain value out of today's show, be sure to smash that subscribe button and ring that bell to turn on all notifications and help me get to 100,000 subs.